Again, welcome to MegaTrade 101 video presentation on the foreign exchange market. By now, you are quite familiar with our charts. Today, we are currently looking at the dollar yen on a weekly basis, as well as the Australian dollar on the same weekly chart basis. Now, going back to the dollar yen, we would like to indicate that there are several ways of looking or analyzing the chart on a weekly basis. The reason why we're presenting to you initially this overview would be looking at it in a better perspective instead of looking at it on a daily or a hourly basis. Although there's nothing wrong in looking at it on a short-term basis, but for practical reasons on analysis, it would be better to look at it on a bigger perspective. Looking at here, you could see that there is an inverted head and shoulders formation with the neckline running through and being penetrated at 93.58, which is currently working at 94.02 with a slight correction after the big movement with a high at 94.68. That is the first initial looking at it on an inverted head and shoulders formation where the signal and indication is more of an up move, obviously. Looking at it on a channel perspective, it is obviously coming from a low of 84.53 here, and with the next channel line at 95.11, which is actually the initial target here on a 38.2 Fibonacci fan formation. That would be the next initial target that the dollar yen would have to move and eventually be touching the 95.50 to 60 levels. The symmetrical triangle here, which is on a shaded aqua green color, would already have indicated that the apex on the symmetrical triangle would not have been filled in simply because the break would have been made at the 91.47 Fibonacci fan formation 2. So looking at it with a measurement of breaking the neckline and the trend line would have already indicated that a major uptrend was in the making. But that is after the fact. However, we did make a presentation before this fact happened. That is why taking the note on buying the dollar yen at the 92.69 level as indicated here in our March 29 at 92.69 price level, buying the dollar yen during and even before it happened. So currently everyone now is looking simply because of a correction at 94 level here as indicated with a low at 93.88. Some analysts and traders would be looking at an opportunity to long or take a buy positions at this point in time. However, there will always be corrections, either both major or minor corrections for and even before a major uptrend would continue. And in spite of all those things, the momentum have kind of slowed down simply because the prices has already gained and reaching an overbought area, basing it from the Fibonacci retracement levels. With all the reports favoring the dollar at this point in time, to be able to use an arbitrary hedge and making use of the Australian dollar, looking at it on this perspective prior to the Reserve Bank of Australia raising their interest rates to 0.25 basis points, have already triggered at this point in time at 0.9242 for the Australian dollar, which obviously with this spike formation here would have already triggered long positions or interest to buy, and at the 0.8655 level is actually a very strong support price for the Australian dollar, which held prior to the rest of the other currencies. So taking that cue, we also took a position on the Australian dollar on April the 5th, longing at 0.9210 and currently working at 92.45, which is already a substantial amount for us to be able to sustain a corrective movement and protecting our gains on the dollar yen position that we initiated. So even if the dollar yen moves lower, now you are actually maximizing the Australian position where the Reserve Bank of Australia have raised their interest rates to 4.25. So in all cases, this trade and strategy has been applicable, although prices do change and there is no guarantee that everything or the same would happen in this kind of a spread and arbitrary hedge using both the dollar yen as well as the Australian dollar. Because the Australian dollar, even on a daily basis, have already indicated breaking on the high side. So once the prices breaks, it's either taking the initiative to buy long on the way up and try not to buy on the way down. So looking at it now, it's gaining more momentum. As momentum increases here, where the percentage, Williams percentage range, is moving towards its minus area. At any rate, with these two presentations, the dollar yen as well as the Australian dollar are moving in tandem together with the US dollar moving higher. These are exceptional times and exceptional cases where the financial crisis and the recovery of most major economies are in the making. So it would be wise to go with the trend and simply not backing the trend. Good luck and have a good day with your trading.